Thanks, Anna. Thanks for having me back. I always love coming here and doing these presentations. It was great that you just had Peter on because Peter is also an order flow trader and educator. And, there's a lot of overlapping between his type of order flow and my type of order flow, reading what comes into the market and trading it. And basically, what I want to talk about today is show you how to use order flow to recognize, the bad trades so you don't take them or get out of trades earlier. You know, One of the things that every trading book out there talks about is, cutting your losses short, right? Everyone says, to be successful, you got to be able to last in the business. And the way you last in the business is by, cutting losses as close as you can to break even and keeping them small and let your winners run. But, in theory, it sounds great, but the practicality is, most people don't do that. Most people have this mentality of, I'm just going to let the trade, I have a signal, it says buy or sell, and I'm going to take it. I'm going to go down with the ship. It is going to go to my take profit, or it's going to go to my stop. And, all too often, a lot of people end up losing more money by getting stopped out on trades that they could have got out earlier. So my goal for you guys today is, one, I'm going to show you how to use order flow to manage your trade so you can see what's happening in the market and make that decision, should I get out of this trade, or is this trade going to have a higher chance of success? And also I'm going to show you how to use order flow to stay out of bad trades before you take them. Now imagine, at the end of the year, right, you look at your trading results and you see that, oh, okay, I had 650 trades for the year. And you're sort of, a 50% hitter, right? You're going about, plus, 325 winners, 325 losers, if that was exactly 50%. But what if you can automatically take out, say just 50 of those losing trades? So instead of having 650 trades, you only end up with 600 trades, but you removed 50 of the losing trades. You'd end up with a much higher trading percentage, but more importantly, you'd end up with more winners than losers. So if you stick around to the end, for those that are new to me, I'm gonna give you a link that you could go and download my book on trading order flow. It's a 150-page book that I wrote on trading order flow. So, for those that are brand new to me today, just a little bit about myself. I've been in the trading industry for about 25 years. The last 4 years I've been with Orderflows, the company that I started. But prior to that, I spent 8 years at JP Morgan as vice president of futures trading, on the trading desk trading. I spent 3 years at Commerce Bank. I was the licensed Eurex trader in Chicago. Commerce Bank couldn't trade bunds, bobbles, shats, DAX, anything without me being there at Commerce Bank. I had the license. I was the member with the exchange. I spent 4 years at Cargill. It's the largest privately held firm in the United States, and the big commodity traders. They trade everything you could imagine, not just futures. They trade in the cash. They trade forwards. They trade spot, everything, anything. Salt. They trade shipping contracts. They trade everything you can imagine. Prior to that, I was with the English trading company, EDF Man, that's been around since the 1700s. Big sugar traders, that's what they were famous for. And I started on the CME floor back in the 90s. I literally started at the bottom of the industry and worked my way up, all the way up to JP Morgan. I started as a runner. I made, what was it, like $5.25 an hour or something. And I like doing these presentations because now there is no trading floor where you can get access to traders and talk to traders. It's very difficult to talk to successful traders nowadays. They're successful traders, trade for a hedge fund, and you just can't approach them. And being on the trading floor, you're exposed to many different trading styles, long-term, short-term, anything you could imagine. People were trying to make money on the trading floor, trading that method. So, after I left JP Morgan, I was trading order flow from my own account. I started writing my book, and I was using order flow software actually from another company. But all the order flow software that was available at the time was just basic. It was just formatting the data into a footprint chart. And if you're familiar with software, right, that it exists to help make your life easier, to help you do things, help you analyze things. And so I wanted Orderflow software that's going to help me do the analysis I was already doing in my head and by hand. And it took about 6 months to really get what I wanted done. I had a nice programmer who understood order flow. That's very important. A lot of these programmers nowadays, they don't understand order flow, and they're trying to make tools to help traders, and they're just copying stuff, right? They don't have anything original. Peter pointed this out. It's just there's so much software out there now that you don't really understand what you're getting, especially if you're new to order flow. That's why I talk about my background, so you can understand what the Orderflows software that I have does. Now, I'm not going to really talk about my software here today, but if you're interested, just go to orderflows.com. A lot of people, have positive comments. The software, people that understand trading and have adapted order flow, just find it just makes trading much more easier. Here's a comment someone posted on Facebook a while back. The software really helps them see what's happening in the market. For example, who's in control and who's not. Now, what I'm presenting is what I base my own trading on, right? This is what I did for 20 years at a very high level. This is what I did to earn money to pay my bills, pay my house, pay my car, pay for food, everything. I didn't trade, as a hobby. No, that's what I did for a living. And hopefully you can pick up some nuggets that you could apply to your own trading. And if you can't apply exactly what I teach, maybe you can modify it to help you in your trading. Now, I'm not saying that you have to say do what I say just because I say it. No, you have to evaluate it, and decide if it's going to help you, and if not, reject it. Now, before I begin, just brief disclaimer: don't trade with money you can't afford to lose. It's very difficult to be a successful trader if you're under a lot of stress. Now, I've worked with a lot of professional traders. I've worked with a lot of retail traders, and I always like to see what's working for people or what's not working for people. Why do people fail? That always fascinates me. You go to these message boards. Most failed traders spend a lot of time on message boards complaining about stuff. This doesn't work. Professional traders just trade, and there's a big difference. And one of the reasons I've noticed, you could just go read people's journals that they post online. And the number one reason why people fail is they take bad trades. It's simple. If you want to improve your trading, the easiest way to do it is simple, is don't stay in bad trades. It's just like dating, right? If you're in a bad relationship with somebody, you cut the relationship. You go on, there's other fish in the sea, there'll be other trades to happen. When you get into a trade, it's like playing cards, right? You're dealt a hand of cards. You can only play what you're dealt. Now in poker, that's a game. If you got bad cards, you can fold, right? In trading, all you have to do is you get out of the trade and you wait for a better hand. You wait for better opportunities. What looked like a good opportunity right now, maybe 10 seconds later looks completely opposite, because there's order flow coming in. You may sit here, all the planets may be aligned, and everything, all the trend lines perfect. You take the trade, but you know what? There's a program out there. Goldman Sachs has a program to do. You just got long. Goldman Sachs algo says to get short. Goldman Sachs comes in and sells 5,000 E-minis, even though everything on your indicators tells you to buy. Well, if Goldman Sachs starts selling a ton of E-minis, your trade's probably not going to work out. You're probably going to get stopped out, or you're going to take the loss. And you have to realize that that's where reading the order flow comes in hand, is because you can see what's happening in the market and make a decision. Okay, this trade is not working out as I expected. I better get out. So, any card game that you play, you get an ace, you're sitting pretty, whether you're playing poker, blackjack, or war, go fish, you get an ace, you're happy, right? And the thing is, in any game that you're dealt an ace, any card game, you have a good hand, right? If you have a bad hand, if you're dealt a 2 or a 3, you're gonna think, oh my gosh, I got a bad hand, I'm probably not gonna win this hand. So it's like trading, right? You get into a trade and you got a weak hand in the market, even though you're in the trade. Well, the market gives you the opportunity to get out of it by cutting it. That's where everyone talks about cut your losses short. You got a bad hand, okay, you got into the position, it's not really working out, it's not doing what you expected, you cut it. That's what people talk about when they say cut your losses short. So, if you have a trade setup you like and you get into the trade, you manage the trade by watching the order flow. But people say, well, how do I do that? I don't know what to look for in the market. Well, you have to look at the order flow. You have to look at how the orders are coming in after you get into the trade, right? Now, with the order flow, I've narrowed it down to 3 building blocks. That these are the 3 things that every trader needs to know about trading with order flow. It's delta, it's point of control, and it's imbalances. These are the 3 building blocks that everything about order flow is built on. Once you understand these 3 concepts, then you're going to understand what's happening in the market. Now, every bar is going to have a delta. Every bar is going to have a point of control. Not every bar is going to have an imbalance, but maybe half of them will, and that's very important information. This is market generated information. Now, just really quick, delta is the net difference in a bar between aggressive buyers and aggressive sellers. And most software, like this is my software, this chart here, delta appears on the bottom. If it's positive delta, generally it means buyers are in control. If it's negative delta, a negative number, then it means sellers are in control. Okay, now the point of control, each bar has a point of control. It's the price level in a bar where the most volume traded. Okay, and generally as the market is moving up, point of controls are going to be migrating higher. If a market is moving down, subsequent point of controls are going to appear lower than the previous one. And these can act as supply or demand. Sorry, I should change that to support or resistance rather over the next bar or bars. People always wonder why the next bar comes starts printing and trades back to a certain level in the previous bar. Oftentimes it trades right back to that point of control in the previous bar. And just imagine, that information, knowing in the next bar where the market can pull back to, that's information, even if it doesn't do it 100% of the time, if it just does it 50% of the time, which is about what it does with the order flow, maybe a little bit less, you know, you can build a trading plan around that and you could help analyze what's happening in the market. Now, imbalances, again, not every bar is going to have an imbalance, but you got to remember, right? An imbalance, the markets trade in a two-way auction. There's a bid, there's an offer. And when the volume that was traded on the bid against the volume traded on the offer is over a certain amount, industry standard is about 4-to-1. Peter just mentioned he uses about 2-to-1, but his analysis is a bit different, and what he's really looking at, and just what I'm looking at, is where the imbalances are appearing in the market. And on an uptrend, you're going to see buying imbalances. On a market moving down, you're going to see selling imbalances. Why? Is because you're going to be having aggressive sellers as the market's moving down, causing selling imbalances. You're going to have buying imbalances as the market's moving up because you have aggressive buyers actively lifting the offers, thinking this price is a good price, I'm going to buy it, I'm going to buy the next price, I'm going to buy the next price. They're happy to take the market higher. They're being aggressive in moving the market. Those are what imbalances are. And once you start understanding the relationships between the buyers and sellers at a price level, then you can understand the market better, right? Now, the problem with a lot of traders, again, this is why I was doing this presentation, is because, I want you to understand you don't have to go all in on every single trade, right? You can just, feel the water, get into the trade. Is the market doing what you expect it to do? Watch the order flow. You have to manage the trade. A lot of traders think that, oh, I just bought a system. I bought a method that says, if it prints blue, you buy. If it prints red, you sell. Well, yeah, sometimes it'll work, sometimes it won't work. What if you can eliminate the times it doesn't work and takes the full loss? If you could just minimize that to, a few ticks and then let the winners just take care of themselves, where do you think you're going to be at the end of the day? You're probably going to be ahead of everybody else. So again, I just talked about the 3 concepts of order flows, delta, point of control, and imbalances. That's what you're going to look at in the order flow once you get into a trade to manage that trade. Okay, so I'll just take you through a couple examples, a couple walkthroughs. This is where the power of order flow really comes in. It's market generated information, right? And it's a bit like reading a book, reading a story. The market is telling a story on what buyers and sellers are doing. I have a buy signal here, okay? Doesn't matter whether you're using, an order flow indicator or, some indicator you just bought off, your buddy or someone you bought off Facebook or wherever. Doesn't matter. What matters is you got into a trade, what's happening after the trade happens. Is there complementary order flow? Is there order flow telling you that you got long? Is there buying coming in? You want to see buying. Market's not going to go up just because you bought it, right? You need other people to have a reason to buy also. So this is bar one, ground zero, right? I have my signal, I have my stop level, so I'm ready to get long. I get long, okay? Next bar, it's kind of mixed. It's got negative delta. It's got -5 as the delta. The bar opened and closed at the same level. Okay, I got a couple buying imbalances. Yeah, okay, it's not the worst bar that you could have after you got long, but it's not looking good because it's kind of a smallish bar. You can get long, you expect the market to take off. You don't expect the market to start going sideways. The next bar after that, what happens? You got a red candle. Well, the market's not going up, right? It's going down. You got a lower point of control than the previous bar. That's also a bearish sign. Delta is small. It's 1. It's +1, which is could be 0. It's kind of neutral in that sense. So I'm not seeing a lot of bullish activity at this point. I'm in the trade. I'm underwater already. I'm thinking, this is where you got to start, being proactive in your trading. Do I stay in this trade or not? You're already 2 bars into this and you're already losing money. Okay, wait for the next bar. All right, next bar comes in, another down candle. Point of control is higher. Okay, that's a little bit good, but you got negative delta. The market's still not moving higher, still hasn't gone higher than the second bar after the signal bar. So it's just going sideways at this point, and you got negative delta. Where is the aggressive buying coming in? You don't see a nice positive delta. Then you take it over the next bar. Trades down, point of control is lower. You see a selling imbalance, you see a buying imbalance, but you see negative delta. You're not seeing what you want to see in the order flow. You're not seeing higher points of controls in each bar. You're not seeing positive delta coming in. You're not seeing a lot of buying imbalances. Your buying imbalances, you had 2 right after the signal bar, but that was it. Next bar comes in, another red candle. This market just can't go anywhere. To be honest, by this bar, if you're not out of this trade already, you really ought to be getting out, because this is at the point you're going to be sitting around thinking, oh, well, I know my stop level's here. I'll just let it go to my stop, take me out. No, you got to get out. Save yourself. Save yourself 5 ticks. Why should you take the full loss of 10 ticks when you could cut it smaller? This is what it's talking about when people say cut your losses short. This is how people think, well, I'll just have a tight stop. That's going to cut my losses short. You got to manage the trade, right? So at this point, you got 3 point of controls all going down, 3 bars with all negative delta. Actually, you got 4 bars with negative delta, 1 with positive delta of just 1, which is might as well just be 0. Obviously, you got red candles, 3 red candles going down. It's not looking good, right? Next bar, small green candle. Still negative delta. There's still selling going on here, right? You're ending up these bars with negative delta. That's not a good sign. Now, this is an area where a lot of traders get stuck. This is something I've noticed over and over. A lot of traders see this bar number 8, starts turning up. It's a green candle. You got a higher point of control. You got a couple buying imbalances towards the top of that bar, and you got a positive delta. They're thinking, well, this is it. I sat through all this junk in here, the last 6 bars, last 5 minutes, market going sideways. Now it's going to turn around and start making its move. This is where a lot of traders get caught, because what happens oftentimes, the market should have moved already. You're so far away from what was happening on your indicator. In this case, this is my market exhaustion indicator that is bullish for the market. Well, the market's not making that move, and you're just spending more time going sideways. The reason for that trade has deteriorated over time. People don't realize that. Think of it, as a hedge fund trader, right? You're a macro trader, right? You trade fundamentals, and you have a trading decision, right? Your trades you last for months or years, right? Imagine instead of a 1 minute chart, you're looking at weekly charts. The guy takes a trade, he thinks the price of cattle is going up because of some cattle disease, but then the market doesn't go anywhere, right? Maybe there's something else. Maybe they found a cure for hoof and mouth disease that the price isn't going to go higher anymore in this time. Cattle's being vaccinated, it's being cured. Well, that's new information that's coming in, just as, with the order flow in a very micro sense here. I'm looking at a 1 minute chart. There's stuff coming in the order flow. People's minds are changing since the signal was generated because you're not getting that complementary order flow, the follow through buying in this case, since, it was a long signal, it's just not there. You're already 7 bars, 8 bars from the signal bar, then market starts poking a little bit higher. And this is it. This is a lot of people, they take a lot of heat on trades thinking this is it. Market's going to start making that 50 tick move. And then what happens? Instead of getting out when they had the chance to get out at a small loss or a break even, boom, just enough to keep sucking them in there. The sellers come in, boom, stops them out. All right. Whatever support was there is now gone, and the sellers have taken over, right? Because imagine what's happening here is you do have some supportive buying, right? You're going sideways. There's potential absorption going on. Well, once you remove that absorption, what's going to happen to the market? It's going to drop. The bottom's going to fall out, right? And then eventually, you just get stopped out. Kenny Rogers had the great song "The Gambler," and I don't like to use gambling analogies in trading, but this is actually more of a life analogy. You got to know when to hold them, know when to fold them, know when to walk away, know when to run. Whether it's trading, whether it's playing cards, or whether it's dating somebody. You got to realize when things are not working out. We all love the trades that are textbook examples. You get your buy signal, and then the market just boom makes the moonshot, goes straight up right after you buy it, or right after you sell it, boom, market just sells off immediately, hits your profit target within the next 1 or 2 bars. Those are the great trades, but not all trades are going to be like that. You're going to have these trades where the market just goes sideways on you. You just get stuck, you get caught off, you get caught in these little traps, and then the market sells off. I always say the market gives you an opportunity to get out at a small loss or break even before it goes to the full loss. So here's another example. Just walk through this one really quick as well. You got your buy signal, right? You get long, okay? Yeah, I got nice positive delta. I've got the bar turning up. I got buying imbalances in there. Everything is looking great. Okay, get long. Well, next bar comes in. Hey, this is great. Trade's starting to work out. Next bar is up. I got buying imbalance. But what do I got in here? I got small negative delta. Okay, no need to panic yet. It's still looking okay. I'm not negative on this. Just because I got a small negative delta doesn't mean it's the end of anything. I could read that as being some supportive buying coming into the market, and I'm in the money. Okay, but I got to see what's going to happen next. Next bar doesn't go any higher, turns around, lower point of control. Delta is positive, positive 17. Okay, that's a decent sign. It's got a buying imbalance in the body of the bar. Okay, well, it's starting to give me mixed signals, right? I want this next bar, I want the market to be going higher, not sideways on me. This bar it's almost an inside bar, but that's not a good sign. Then in the fourth bar, what do I got? I got negative delta, minus 40. I got 5 selling imbalances in this bar. I've even got a stack selling imbalance in there. I got a lower point of control, a lower high, a lower low. This is not what I want to be seeing. I want to be seeing higher high, higher low. I want to be seeing buying imbalances. I want to be seeing positive delta. I'm already 3 bars into this trade, and I'm sitting on a small loss. That's not what I want to see after being in the trade after 3 bars have already printed. You want to be going higher, not lower. Next bar, even lower. Another down candle, another negative delta, another lower point of control, selling imbalance down there at the bottom. It's not looking good. I have my stop level down here, and I'm trading about 6 ticks above the stop level. This is at this point I got to start thinking I got to turn mother's picture to the wall and get out of here, right? There's no harm in taking the loss when all the order flow that's come in after you got long is negative. Next bar turns up. Again, this is the market giving you that opportunity to cover it. You got stack buying imbalance, you got a total of 4 buying imbalances in there, you got a nice positive delta. Green candle is looking good, higher point of control. Okay, this is your opportunity. If you didn't get out at the end of this bar, this is your opportunity to potentially get out now. Because if you don't, what's going to happen over the next several bars? You're just gonna get more of the same. Down candle, up candle, down candle before it finally pokes down and goes to your stop level and stops you out. Why take the full loss when you could have got out at a half a loss? Okay, so that's how you can manage your trade with order flow. By understanding when a trade is not working as expected, you got the opportunity to cut it early rather than letting it go to your full stop and taking that full loss. It's like we all have cars, right? You got to take your car in for servicing. The reason you do that is so it stays good. That waiting for all the red lights to start flashing is not the time you want to be doing it, because the car is probably going to break down. You got to manage your car. You got to maintain your car. It's just like with the trade, right? You got to maintain the trade. So what I'm going to show you next is really the meat and potatoes here is how to use order flow to stay out of bad trades before taking them, right? Like I was talking to earlier about this is, if you can remove a certain percentage of the trades that are most likely going to fail. Honestly, you may remove a couple that are going to be a winner, but if overall you're removing the trades that are going to fail overwhelmingly, you're better off removing that whole set. And it's not a topic that's really discussed at all. And I call it entry execution. It's more of an advanced topic on trading, but no one really talks about it, and one of my boss at EDF, man, after I had a very bad trade, he's kind of being facetious and sarcastic, but giving me a little Mr. Miyagi moment at the same time. Is he saw I was kind of upset about this trade that I took that lost money, and he's like, I'll give you a tip, don't lose money. Okay, and then I was for like a week after, I'm like, what the hell is he talking about? Don't lose money. Of course I don't want to lose money. What he meant is stay out of those trades that are going to lose money, right? It wasn't until afterwards that I really understood what he was talking about. And even Peter just touched on it on his presentation. Is everyone is so indicator based, the red light, green light, there's a buy signal, you take it, there's a sell signal, you take it. That's not trading, right? Like you said, you could get a Goldman Sachs, JP Morgan could get a monkey to trade. Well, actually, they'll get a computer to trade it, probably get a monkey to sit behind the desk and just eat bananas and make sure the computer doesn't get, touched. But the way I use order flow and the way I prefer people to use order flow is to watch what's happening after they get a signal. You could either take the trade immediately or give the trade a chance to work. If you get that complementary order flow coming in, that's when you take the trade. Would you rather miss a trade and not take a full loss, or take a trade, give up 1 or 2 ticks because you got in a trade, a bar later, 2 bars later, give up a couple extra ticks rather than giving up a bunch of ticks, okay? And when you're using order flow to find trades, after you find the trade, wait for the complementary order flow to appear, or rather don't wait, read the order flow and understand what's happening, because that's where the benefit in order flow is, understanding what's happening in the market. So if you're buying, you want to see buying order flow coming into the market after you bought. If you're a seller, you want to see selling order flow coming in after you're sold, right? The market's not going to move just because of you, right? Just because you bought, it's not going to go up. Just because you sold, it's not going to go down. You need everybody else to be doing the same thing. So what are you going to be looking specifically for in the order flow? Well, if you're long, you're going to be looking for price movement in the direction of your trade, obviously, right? You're going to be looking for the market to go up. If the market's going down after you bought, chances are it's going to keep going down. You're going to look for positive delta. You're going to look for higher points of controls. You're going to look for buying imbalances. If you're short, first thing you're going to look for, obviously, is price movement in the direction of your trade. You want the market to be moving down, not up if you're short. Negative delta. You're going to want to see aggressive sellers. You're going to see lower point of control. You're going to want to be seeing the value area of the bars migrating lower. And you want to see selling imbalances, right? You want to see aggressive sellers coming in and taking out price levels. Now, where do you want to see it? Well, you want to see it happening in the next bar or two. You're not going to be waiting for 10 bars for confirmation. If you don't get the confirmation immediately, trade's probably not going to work out, right? If it's not there, don't take the trade. The markets have been here for 100, 200 years almost. It's going to be here for a lot longer. So if you miss a trade, there's going to be plenty of trading opportunities. And depending on the type of chart you're trading, whether it's a 1-minute chart, 5-minute chart, you're going to get multiple opportunities throughout the day. I know people that trade on 30-second charts, 15-second charts. It just really depends on you. Simple, right? You get to an intersection, red light, green light for the traffic, the stop sign, the don't walk, the walk sign. Just because there's a walk sign, you don't just immediately start walking. You look to the left, you look to the right, then you start walking. Once everything is clear, you go. And it should be the same way when you are trading. When everything is clear in the market, that it's going in your direction, that it's your time to take the trade, you go, right? So I'll just take you through some more examples so you could understand what I'm getting at here. So here's a buy signal, right? Okay. What I'm saying is don't get long immediately. This is, people get excited, right? Oh, I got a buy signal. I got to get long. My indicator says to buy it. I got to buy it. Well, if you buy it, okay, what happens in the next bar? It's got negative delta. It's got selling imbalance. It's a down candle. Point of control is at the same level. It's not looking good. Okay. But if you don't buy it because you're waiting to see the order flow coming in, you're not in this trade. Next bar after that, market trades lower would have stopped you out. Okay. Then sort of went sideways before crapping out and selling off. Wait for the complementary order flow to come in. If it's not going to come in, don't take the trade. Here's another one. All the charts I'm showing you is just mini Dow. It's a 1-minute chart. Okay, so I'm not like picking and grabbing. This is just over the last 2 or 3 days. So it's not like I'm just picking and grabbing in certain situations. If these trades worked, they worked. If they didn't, they didn't. But I'm showing you how you could eliminate trades like this one, right? You got the nice down candle. You got 5 selling imbalances in the bar, and big, open on your high, close on your low. Negative delta. Everything is bearish about this bar. Okay, don't get too excited yet. Wait what happens in the next bar before you get short. If this next bar starts coming in, starts trading down, I'd be a lot more excited. What do you got? Well, market turned up for 1. You got positive delta for 2. Okay, you don't have selling imbalances. You don't have buying imbalances. Point of control is, it's lower, but part of the reason why it's lower is because the bar is so short relative to the previous bar. Okay, that's not a good trade to be in, but you're not going to be in it because you're not seeing the order flow complementing, confirming what you saw on the signal bar. The next bar, higher point of control, positive delta. Again, another small bar. It's not looking good. Don't start thinking this market's just going to go sideways, for the next 10 minutes and fall over. No, you expect the market to make that move. You could have eliminated this trade, even though you have a signal. This is one of those trades you should have stayed out of. An order flow, by just waiting a little bit, would have kept you out of this trade, right? That's what you want to do. Is you don't want to take the trades that are going to just go right up and stop you out, right? That's not what you want to do at all, right? Here's another example. Okay, you got red candle down, positive delta, you got some selling imbalances, 3 of them in there. Then the next bar, you can't even take out the low of the signal bar. That's your first sign that this trade is probably not going to work out. If the market price action of the next bar isn't confirming the order flow of the previous bar, and then you see higher point of control, buying imbalances, positive delta. Forget it. Don't think, oh, I'm going to sell it up here and catch this pullback and come down, because what's going to happen is it's going to pull back and it's going to keep pulling back. And it does before it just ends up going sideways. It would have stopped you out. Okay, here's another example. Okay, again, you got the nice big wide ranging bar. giving you the sell signal. You got selling imbalances. You got a high point of control. You got negative delta. It looks very bearish. Next bar comes in. It can't even go lower than the low of the signal bar. And you start seeing buying imbalances come in. You start seeing positive delta. This is one of those trades where you sit there and say, okay, yeah, look, I'm ready to get short. I just need some confirmation. I want to see the aggressive selling coming in because I want to be short. So I want to be looking at negative delta. You're not going to really be too concerned with the point of control right away because it takes time to form the point of control because that's the point in the bar with the most volume. So it's just going to hang around until the bar closes, but you're not seeing, you got one selling imbalance, okay, but the market keeps ticking higher, right? That's not a good sign, right? The next thing you know, you're taking out the high of that bar. If this is one of those trades that kill the back of a lot of traders, oh, I got a sell signal, I get short, boom, same bar, market stops them out. This is why people, they want to punch their computer screen. They see these bars, but what I'm saying is, you can just wait a little bit, let the market take you in, right? If you're not seeing any flow coming in that's negative, right? You want to be short, so you want to see negative flow in the sense of aggressive selling, then you don't want to be in that position. So you could have eliminated, you could have stayed out of this trade, you could have stayed out of this trade, you could have stayed out of that trade, you could have stayed out of this trade. That's 4 trades within the last couple of days. I could have just taken off my desk completely, rather than get stopped out or give up, emotional capital on. I could have just passed on these trades, not taken them, not worry about them because, I'm not seeing the subsequent order flow coming in, giving me a sign to get short, right? Now, here is a sell signal. What happens in the next bar? You start trading lower, you take out the low, you put a lower point of control, you got a negative delta, right? You got selling imbalances. This is what you want to see, right? This is where you're going to be getting short, on this bar somewhere, right? Compare this bar to this bar, this green candle, right? You don't want to be getting short on a market that's going higher, because chances are it's going to keep going higher, right? An object in motion is going to keep going in that direction. You do pull back a little bit before you make that 20 tick move that you're looking for. But you don't get anywhere really close to where your stop is up here. Here's a beautiful one, beautiful buy signal, right? You got stacked buying imbalances, you've got positive delta, you're at your low, next bar comes in, pulls back a little bit into the stacked buying imbalance, which is, an order flow trade setup that you like to see. You got a higher point of control, but you got that negative delta. Okay, that's just something that's sort of lingering, got a question mark over your head, but then the next bar just kills that. 3 buying imbalances, higher high, higher low, positive delta, strong positive delta. If you weren't convinced in this bar, the second bar after, the signal bar, by the next bar, you should be loading up on this. This is the bar. Yeah, I think its market's going higher. And what happens? It goes sideways before making that 20-point move that you're looking for. Another example, right? Come down here, you got your buy signal, market starts next bar, what happens? Positive delta, right? You got nice volume, okay, that's good. You got higher point of control, higher high, higher low. You've got, the bar closing above the high of that bar. Okay, fine, I can get long now, right? You're not getting long so far away from, the close of this bar. I always say with order flow, you gotta wait for the bars to close to confirm everything. But then you just wait, just give it, a few more seconds before you take the trade. Identify that it's working in your favor. Next bar comes in, it's 3 price levels, right? It's a doji candle, opens and closes where same level. Got negative delta, okay. It's not the end of the world. It's still a good buy based on what happened right after the signal bar. And then boom, the aggressive buying comes in, nice strong positive delta, nice stack buying imbalance, and the market just makes another 20-point move. Everything is there in the order flow in the next bar to tell you, yeah, you have the follow through order flow coming into the market. Okay, last one here, buy signal. Next bar has confirming price action. It closes higher. Now again, I'm always hesitant to want to buy a new high, but if you're one of those breakout type traders, you got the breakout, you got a higher point of control, you got positive delta, bar closed higher. You don't have any buying imbalances in there, but you got enough happening in the other parts of order flow to want to be long, and the market, boom, makes new highs, makes new highs, makes new highs. So again, it doesn't matter what method of trading signals you use to find trades. What you want to do is monitor what's happening in the market via the order flow before jumping in, right? You don't just jump in both hands saying, oh, I got a buy signal, I got to get long. No, wait for the order flow to come in to say, hey, now's the time to get long, okay? Because imagine, look at this. This is just 8 trades, right? You had 4 winners, 4 losers. Every losing trade, there's a reason to not take that trade, even though you had a signal. Every trading system gives you signals, right? You could even just buy, sell at random. But what happens after you buy or sell in the order flow is going to help you understand whether the trade is going to be a winner or a loser, right? Don't jump into all the trades thinking, oh, I got to buy signal, I got to buy. That's where people get burned. All those people that bought Bitcoin kept going up. I got to buy. I don't know anybody now that's above water on any Bitcoin or cryptocurrencies, because they didn't take a step back and read what was happening in the market. So hopefully by now, you can understand how using order flow is going to help you put the pieces together to improve your trading, help you, stay out of bad trades or get out of bad trades early rather than taking the full stop. Honestly, we love these trades. As soon as you get in, it just goes in your direction. Unfortunately, a lot of times there's many trades that just go sideways on you, or there's trades that just immediately go against you, right? If you could eliminate that, imagine what that's going to do for you mentally as a trader, as well as financially as a trader. It's going to reduce a lot of the losing trades. So again, if you're interested in order flows, just go to my website, orderflows.com. I do have 2 specials. I've got this special, which is the order flows basic software, which is order flows trader 2.0, I call it, for NinjaTrader 8. It's orderflows.com/off2.html. If you want more indicators on my website, I got a special package there. Now, for those of you that are interested in my book, go to orderflows.com/book.html. You gotta make sure you put the .html on there, and it's going to take you to this page. You can see this is the web browser. You have to enter your name and email address and hit submit. Once you do, you'll be taken to a link where you can download it. You're not going to get the actual coffee table book. You're going to get the digital download so that you can, read it at your leisure, print it up, read it in bed, or put it on your iPhone or your tablet, or read it at work. It's the thing is, a lot of people don't realize they get into trading, they get excited. Trading has been around for many, many years. It's going to be there. So, get yourself up to speed on what you need to know about trading and understand what's happening in the market. There's a lot of great software out there. You got to learn how to use it. You got to learn how to use software to manage your trades. For me, order flow really helps a lot of traders see what's happening in the market. So let me just see if there's any questions really quick. There are some questions. Use 1-minute charts. Well, you could use whatever charts you like. You could use range-based charts, you could use minute-based charts, but order flow is best used on short time frames. Don't really look at anything above 10 minutes. I don't. 5 minutes is about as far out as I go. I'm a futures guy, but I know people that use it on stocks and Forex. But if you're going to use Forex, I think your best bet is open a futures account and trade the Forex futures contracts, euro currency, Japanese yen, etc. Okay, Sally, I'll get to you. Uh, and I think that's about it, Anna. I'll throw it back to you, Anna. So have a great day, everyone.